Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's DRSTOXX.com. And if you go to the Dr. Stoxx website, which has been in business since October of 2002, if you can believe it, we're coming up on our 23rd anniversary. And you want to join me and a great group of traders who are focused on options, you can join us by going to the subscribe menu, scroll down to the live options room, and that'll take you to the place where you can get more information about what we do in the live options room and how you get to kind of look over my shoulder and trade everything I'm trading if you want. I give you exactly what I'm looking at, the ticker symbol, the entry price, the stop loss, the target price, the reasons for the trade, and lots of great market talk along the way. And once or twice a week, I jump on the live mic and give you some training. If you want to add on the live trading room where we do stocks, ETFs, and micro e-minis, you can do that at a 40% discount. Okay, let's look at some charts. So our task today is a simple one, although it's not always simple. I'm going to try to put on a new trade with the live trading room in a live way. And I'm going to try to take you through the process that I use when I have a short list of stocks. I can only trade one of them. Which one do I choose, right? It's very important that you have that kind of selection process. You need to have tools at your elbows length away that you can use to evaluate companies, stocks, volume flow, option flow, um, volatility, the size of their share offering, how big of a short float do they carry, and on and on. You've got to be able to discern those, and that will help you uh, find the best trade among a short list of stocks. First, let's do a little bit of work on the main indexes here. So we're right up against. In fact, we might even be on a closing basis at new all-time highs for the S&P 500. Yay! So it's interesting. Usually when the market is up at an all-time high, that would indicate that the economy, the overall economy, the American economy, is also at an all-time high. And I'm not so sure that's true. We've had some it's been a good earnings season, but it hasn't been perfect, and there have been some misses along the way, especially in some key stocks. And we're seeing some very key sectors lagging the market, way lagging the market, not even anywhere near 52-week highs, closer to the lows, in fact. We're seeing that in software, healthcare, energy is a bit better, but it's still not that, still pretty far off the highs. Material stocks and so on, and we're also seeing some of the key mag stocks, the biggest stocks on the planet, biggest companies on the planet that are still well below their 52-week highs. So it's not a perfect market, and it's not a perfect economy, but it's a very good one, in fact, and it's a very bullish market, and we're just very pleased that we've been able to trade it. We've been long ever since the early April drop, right in here on tariffs. We've not been able. The market has just not allowed us to put on any short positions or hedge positions. Maybe one or two along the way, right? We got a little squirrely right in here in late May. We got a little bit squirrely right in here in early August. And there were some put plays that we put on in the options room, and some inverse funds we used in the live trading room. And none of those, I'm happy to say, worked out, because we were definitely way long in addition to those puts. And I'm glad that the longs are doing fine. Overall, good steady cash flow coming through. Now, that's the S&P 500. Quick look at the Nasdaq. It's in a little bit more of a pullback, not up at all-time highs, right? But we are, as of today, if I can scroll in a bit closer here, as of today, we are above the RTL, the resistance trend line that defines the top of that pullback. Today is moving day, I like to say. Now, that's not a confirmed breakout until we get a follow-through day. So we need either a higher close tomorrow or a higher close on Friday in order to confirm this breakout today. If we close here, we may crash into the close. We don't know. Now, all kinds of things are coming down the pike. We've got NVIDIA earnings out tonight. We've got a handful of really important software names that are reporting tonight. And then on Friday, we have Thursday is all day going to be consolidating all the data. And then Friday, we have the PCE prices, which will largely determine what the Fed does at its next meeting in September. So very important stuff coming down before we get to the weekend. And we're also getting close to Labor Day weekend, which it's not this weekend. I think it's the next weekend. Correct me if I'm wrong. And historically, it's interesting. If you look at history, when the stock market is up more than 10% from January 1st, and then you get to Labor Day, from Labor Day to the rest of the year, very good. Right? Average of about 5% of increase from Labor Day to New Year's Eve. But the week heading into Labor Day tends to be pretty soft. Not only is there some seasonality thing going on with September, but also just it's time for the market to cool off, and it usually does that in the week heading into Labor Day. So that's next week. So we have to be a little careful. And I've got some guys who do cycle work. I've got guys who do Elliott wave theory, and both of those guys are both of those two groups of guys are hinting at a weaker first week of September. So, we'll have to see. I don't necessarily trade major market predictions, but it's always good to have a kind of a macro view of what the bigger market is doing. But frankly, there's nothing here in this chart that suggests that's going to happen. There was a little bit of a hint of that last week. We had heavy volume pullback into the 50-period moving average, which is kind of rare in a strong uptrending market, but it bounced quite quickly off that, and now we're getting a breakout of the pullback. And as you saw with the S&P 500, we're right up at all-time highs, and we've got this really nice looking kind of cup and handle continuation pattern going on here as well. So all of that's good. The small caps are still well below. I shouldn't say well below, but still below the 52-week highs and well below all-time highs, but they're moving in the right direction, and they have been very strong at the end of last week and for the most part this week. So that's good to see. When the market is interested in risk, they usually prop up the small caps, and the small caps are also running on rate cut hopes. And so Labor Day is this weekend. All right. Well, guess what then? We're almost all the way through. We're over halfway through the week that's supposed to be weak. The WEEK that is supposed to be WEAK. And so far, so good. Yeah. All right. That's good. That's good. I don't know why I didn't know Labor Day was this weekend, but anyway, it is. All right. So ignore that. Now, of course, we still have a couple of days left, and we have NVIDIA, and we have PCE prices, so anything can still happen. But I'm telling you, I'm not seeing anything in the charts here that suggests we're on the verge of a market pullback. Not at all. No, it's just S&P is bullish. NASDAQ is modestly bullish, and the small cap index, I would say, is very bullish. It's a little bit overbought, so it's not a buy up here. It's a hold, not a buy, but it's looking pretty good. Okay, now let me show you. We're going to get down to work here with this list of stocks. So I've got a list of stocks, and there's everything and anything on here. You've got some momentum plays. You've got some meme stocks. I'm not even sure what that means anymore, but we've got some meme stocks. You've got some really good standard blue chip type stocks on here. You've got stocks that are on the list because of unusual option flow, and that's one of the tools I use to determine my short list of stocks that I'm interested in trading. You've got stocks in here that represent two sectors one has been really hot, one has been on the colder side. So software names, especially the big blue chip softwares, have not been doing very well. CRM, ServiceNow, Salesforce, Adobe, Intuit, and until last night, Mongo. Those are big blue chip, big mega cap stocks that have not been in favor with the market. They're trading nowhere near 52-week highs or all-time highs, and most of them are trading under the 200 period moving average. So that's kind of, that's downtrending territory. Um, but they're super valued, right? They're at amazing valuations we haven't seen in quite some time. Software is a troubling sector because not only is everything changing so rapidly with AI introduction, but also you've got a lot of competition from smaller players, and there hasn't really been much in the way of merging and acquisition yet. So the bigger players are feeling the pinch of the smaller players taking some of their market share away. And with AI, everybody has to spend to get up to speed, and that's putting a dent in profit margins. So no surprise that there's no mystery why the software sector is soft. But last night, Mongo blew it out of the park and is trading up over 30% today, way above where it closed last night. And that's a huge shot in the arm for the whole sector. So I've got a few software names on here. I've got a few quantum computing names, which is a sector that's been hot. Analysts love the sector. They keep upgrading stocks. They keep raising price targets. And there are a few stocks in that group that are doing well. There are stocks in that group that aren't doing so well as also. So we're going to ignore those, and we're going to look at the ones that are doing well. And we've got some. I'm quite bullish long term on Bitcoin, and I'm a new bull to the whole Ether crowd. And in the other room, we're long both Ether and Bitcoin. And in this room, we've got some calls on the ETH Ether exchange traded fund. So we're already long those, but there are some related plays in here that I have added as well. So let's take a look at this list. We can let's sort these. How shall we sort these? How about worst to best today? So Hood is up over 105, and it's in this nice consolidation. Obviously, this is a strong uptrending stock. This is, to me, and I'm going to go out on a limb here because I'm a pretty new long-term investor in this company. I got in down here around 75, and I'm already up, 30 points, 30 handles. And here's what got me into the stock. Our daughter went off to college, right? And she's now starting to make a little bit of money and has a lot of friends who are out of college, already graduated. They're making money. And guess what? They're all trading stocks. They're all trading stocks like crazy. They also go to the casino. I don't know what it is about this. Is it the Gen Z generation that they're in? But, college and just beyond college, they're all trading stocks, and they all have Robinhood accounts. And when Robinhood first came out, it looked kind of trendy and hip, and I thought, this is not going to last. It's not going to do very well. But they have, and they keep adding new product lines and bringing in new members and increasing their assets under management, and they're just really firing on all cylinders. So fundamentally, I like the stock, and I really like this chart. One of my favorite setups is the 21 EMA rising. It's kind of flattening out up here, but mostly rising above a rising 50 SMA, which is above a rising 200 SMA. Those three are stacked. This is your linear regression channel. These colored bands in the background here, they are set at 1.5 and 2.0 standard deviation. When that is rising, and when you've got the stacked MAs, you've got a double confirmation that it's in an uptrend. And then what the second part of the setup I like is that it's going sideways and consolidating, right? The range is getting tighter and tighter and tighter. The lows a little bit higher, the highs a little bit lower. And I like to buy in that kind of consolidation close as possible to the supporting trend line. And we got pretty close to it earlier today, and we're still pretty close to it. So I like Hood for all of those reasons. Now let's move through because we're not going to have enough time. Joby is probably the one I feel the least good about on my list because of some fundamental reasons, but it is a meme stock. It's a momentum stock, as you can see. It has a small float. I don't know exactly the short that it carries, but it might be on the bigger side. So it tends to squeeze nicely, and it doesn't take much to get this guy moving really quickly. However, we've traded it a couple of times in the other room, and we just kept getting stopped out, right? We bought this little bounce here off the 21, got started really nicely, and then it got slammed a few days later. Now, back in over here, we got nicely in. I think it was on that hammer candle and got stopped out a couple of days later as we moved up our stops, and then we hit the tight stop. So I'm a little bit hesitant in getting back into it, but it is on the list. Why? Because 21 above the 50, 50 above the 200, down here in the pink zone, just hovering in a tight consolidation above the 50. All right, VST is a play on data centers. It's the energy supplier for big data centers, and they have a very unique product there in energy. And it's also firing on all cylinders. You've got a really nice looking uptrend. You've got a nice rounded bottom. That's important because rounded bottoms are always more bullish than a V bottom. V bottoms tend to bounce up and then they go right back down again. And whereas rounded bottoms, it just because it takes more time for the market to kind of find equilibrium at a valuation point, and then it starts to rise off of that with some volume coming in like it did yesterday. And that's a really good sign. I like this setup. Now, I'm already long shares of this one. And so I wouldn't be playing the calls here, but we'll look at this one. I think this is probably going to make the short list. GLXY is a satellite play, and it's got a nice uptrend going. It's got the rounded bottom, and it's yeah, I like this one too. Some good volume coming in. Soon is all right. I'm going to get this one off the list. Now, this is a meme stock. I do have this on the list because there was some recent call flow into this one and some recent chatter about it in my pro trading group. I belong to a group of professional traders that come at the market from all kinds of different angles. And when I keep hearing a ticker symbol mentioned again and again by different people, it goes on my list. And this is on my list for that reason. You've got a nice power gap here on earnings, but it did come down into the gap. So that's one problem with this chart. And the other problem with the chart is that drop from the earning highs down to the 50 period moving average in just a few days, when the rest of the market is not doing this poorly, is a concern. And in my book, what you want to see on a pullback is something more like this, right? A 45-degree angle or less. This is more like a 75, 80-degree angle, almost a straight vertical shot down. And that kind of downward momentum tends to be hard to overcome. You might get a little bit of a bounce. You might hit a fib retrace on the way up, and then it's right back down again. That's typically the pattern following that. So let's take Soon off the list. I'm going to take Joby off the list as well because I know I wouldn't be getting in that one anyway. I am interested in coin. I'm bullish on Bitcoin. I think it's got a pretty good I'm cautiously bullish from where it is right now. It's down under still a lot of overhead resistance, but it has held firmly and starting to bounce again. And it's in between like 109 and 117, which is support and resistance. And it is closer to support now, I think. I haven't checked it today. But anyway, coin is a play on Bitcoin because it's the exchange where people buy and sell Bitcoin. They do on other exchanges as well, but and they offer other product lines than just that. But it is largely known as a crypto exchange. So what I like about this now, it's not the stacked MAs, but it is a modestly uptrending LRC. We're down into the pink zone, the 2.0 standard deviation. That's typically where you see we don't have any dips down into the pink zone. This is the first one. The mantra is you buy the pink in an uptrend, you sell the blue in a downtrend, right? So here we have an uptrend, and it is in the pink, and we're starting to get some good kind of a rounded bottom, or maybe a double bottom. It's more of a double bottom, right? This is actually an Adam and Eve double bottom. So let me zoom in on that. Let's get rid of these lines first of all. So this is a double bottom, and it's a particular kind that is very bullish. You've got a V bottom on the left side and a rounded bottom that's forming on the right side. The V is Adam. The rounded bottom is Eve for obvious reasons. And this is, of all double bottoms, this is the most bullish. Now, a couple other things that are going on here that I like. You had a big green stick on high volume that shows a funds are buying down there at the bottom, down at the lows. You've got a MACD just about ready to flip to a bullish side below the zero line. That's where you have the best buy signals from MACD, right? MACD is, I don't use it all that often, but when I see that, a buy signal, a buy flip below the zero line, you want to pay attention to that as long as the actual chart itself is in an uptrend. All right, so we like coin. SNPX is one of the software names I was mentioning. I have some long-term shares in this one. I know the company well. It's a play on AI. It's a play on data center infrastructure and a number of other things. And I don't think it's getting the recognition that it should be getting, but it's been in that same space as a lot of other software names, and it's actually one of the strongest in that space. This one and Microsoft are still doing okay. So I like this. This is my example of a soft pullback. Right, it's not 45 degrees. It's maybe 30 degrees down into the pink zone, and now bouncing nicely out of it. Big volume day yesterday. The MAs are stacked. The LRC is nicely uptrending. All things look good technically. This is Warner Brothers, and we're actually in this one as a swing trade for shares over in the other room. And I like the fact that it's doing kind of a cup and handle bottom here. I mean, it's a small one, not that well formed, but it does qualify as a bottoming pattern. And this is in the communications sector. Of course, it's a streaming play and entertainment play and a bunch of other things, music, movies. And I know that I'm pretty sure they have a big blockbuster either already out or coming out. So lots of good reasons to buy the shares of this one. One of the things I do, by the way, and I don't have time to talk about this, but I keep track of sector strength, and I've got about 15 sectors that I track. I have a mathematical formula that I developed, I don't know, 20 years ago that takes moving averages, relative strength, stochastic readings, and volume. And you put those numbers for the sector, you can update them each day. I've got a software that does this. And it spits out a number anywhere from 0 to 100. If it's above 50, it's a bullish trend. If it's below 50, it's bearish. And the further away you get from that 50 line, the closer and closer you get to being oversold or overbought, right? So I keep track of those. And the communication sector has been oversold and now starting to move back up. That's a bullish buy signal. So it's in a good sector, right? It's in a sector that should be getting some good traction from here. So I like that. But because we're already in the shares, I'm not going to do it in the options room. So we'll take that off the list. Here's our first quantum computing play. We've got the ABC pullback off of 52-week highs. I assume that's it. Maybe all-time highs? I have no idea. I only got interested in quantum computing space maybe a year ago, I guess, or less, 7, 8, 9 months ago. And none of the guys that are major players in the space are profitable. And in fact, they're very far from profitable. And I assume probably 2-3 years from now, there won't be very many players in this space. They'll either get bought up by some bigger company or they'll just go bankrupt and fall off. But there are a couple on here that are pretty good, right? QBTS is one of them. IONQ is another one. And RGTI is probably the best of the bunch. These are pure quantum plays, right? So there are big players that also do quantum, but these are guys that are focused only on that space. This RGTI has the best chart, the best analyst support, and the best relative strength of all of them, right? It's the only one I think that's above the 50. Am I right? Well, IONQ is just now above the 50 as of today, and QBTS is well below the 50. Okay, so let's take a look. Now, I don't want to do all three of these, obviously, so let's take a look and eliminate one or two of them right now. MACD down here is closing. It's below the zero line, but it's not near a buy signal just yet for QBTS. IONQ is giving us just now today, very first day, a buy signal below the zero line. And how about RGTI? It's above the zero line. Okay, doesn't rule it out. Doesn't mean it's a bad thing. It's just that it doesn't. It's not giving us as much upside potential as IONQ. So I'm going to get rid of QBTS right off the bat, and then we'll save these two on the list, and we'll take a look. We'll drill down into some of the. All right, I don't know this one at all, but this one was brought to my attention by a couple of guys in the pro trader group. They got to look at this chart. It's doing really well. And this is an amazing chart. I mean, this is an amazing chart. Here's a very good example of a power gap, right? So on earnings, it gapped all the way up here. It did come back down into the gap, didn't close it, got right back up above the earnings gap, back down to Tesla 21, back up above it, and now it's still above it. So as long as that gap stays open, it doesn't close all the way, that's the market saying, hey, you are no longer a $12 stock. You deserve to be a $16 stock because your business is doing so well, right? 33% increase in your business and your projected earnings. And so we're going to reward you by pushing your stock price up above that level. So when I see that power gap, that's a very bullish thing. The only problem with power gaps is that they tend to get they just consolidate sideways for a while to let the valuations catch up to the share price. And that's kind of what it's doing here. But I really like this as a lower risk, longer term trade, right? Because it's just going to continue on, probably hug this midline, hug the midline up, a little bit up, a little bit down, a little bit up, a little bit down, just getting a little bit higher each time. In fact, we might even be able to draw out this new uptrend. Yeah, I don't know if that's it. I don't know if that's the uptrend, but it is uptrending for sure since the earnings, and those are the it's maybe where it's going. Maybe a better way would be think of it as an ascending triangle, something like that, right? And we're pretty much in the middle of that range. So I like this. I don't know anything about the company, however, so I'll keep that on the list and see what the fundamentals turn up. Radware. So this one is a little bit problematic because it did have the big, hold on, it did have the big crash down and then another big crash down all the way to the 200 period moving average, which is typically not where the strongest stocks go. But what I like about this, and maybe this is more of a short-term swing trade than a longer-term option trade, is this rounded bottom. Out of the pink zone, it is an uptrending LRC, and it is, printing today above the 21, a new range high. And it's got the pretty fresh MACD buy signal below the zero. Okay, all of those things are good. I'm going to rule this one off the list, though, just because it is probably the weakest stock on my list here. Actually, this is going to be the weakest one, CoreWeave. I don't think we'll do anything in this one, but I do. It's one of those stocks. We've traded it a few times in the other room, and maybe once or twice in the options room. I'm not sure. But if you latch onto a move like this, especially with call options, you can see 5, 6, 7-fold increase in your little investment in just a matter of days. It's one of those stocks, right? It's got a fairly low float. It's got a heavy short. So over 20% of the shares are held short. And what I like about what it's doing right now, it isn't an uptrending LRC. It's not, the MAs are not stacked. We don't even have a 200 because it's an IPO. But it is showing a kind of an Adam and Eve rounded bottom. Yeah, I would call that an Adam and Eve. Just the Eve is a little bit lower than Adam, and it's coming out nicely of the pink zone. We're seeing some very good volume accumulation going on. almost at a new MACD buy signal, and the last time it did that, it shot way up. Uh, I wanted to show you something here that's interesting that you can put in the back of your mind for CoreWeave. But let me get through the rest of these first. All right, so Riley it's a financial asset management firm, which is a pretty good space to be in. It's a it's got a heavy short float. It's like 30%, I think. Tiny float, lots of shares are short, and it's getting some very unusual call flow today. Now, it's doing a 3-bar reversal. It's a big green stick. I don't initiate positions on a big green stick. I just have a rule against doing that because more often than not, you'll be able to get a much better price the next day or the next couple of days as things kind of retrace as they usually do. But it's interesting. I'm going to keep this on my watch list. I'm going to take it off this list just to throw that out there that it is one that looks like it's, could really squeeze higher. It's 560 now. If you could get in maybe closer to 530 tomorrow or the next day, and you could ride that up to 7, yeah, that would be a nice trade. But I'll see you later. So SCRV, also some good call flow. I don't know anything about the company other than it is in the robotics space, and it is showing fresh breakout today. So this is a good-looking move. It's not a clean uptrend with the stacked MAs, but it's a nice uptrending LRC. We're back above the 200 period moving average. Absolutely massive volume coming in. So these are funds that are buying. These are not traders like you and me. No one has that kind of deep pockets to buy that sort of massive volume. And if you were to look at the call flow on this one, you would see that it's very, very strong. So I'm going to keep this on my list, but I don't think it's even an option right now because of how far it's come in just a couple of days. All right, let's take a look at CoreWeave. I'm going to show you something really interesting here. So back in early August, it ran from, I'm just going to round off numbers here, like 105 to 150. Okay, so 105 to 150, 45-point move in the price of the underlying. Now, if we go to look at the call flow today, CoreWeave always gets massive call flow, very high numbers in terms of the value of each trade. And things have kind of cooled off now. Funds are just buying. But I suspect that a lot of that is positioning into shares rather than trying to make money from the calls. And because the stock has been falling, all of those trades are underwater, really underwater. So I don't put a lot of stock in observing the call flow, but there were some interesting trades that came in today. They were at the 115 strike, right? So the value, where's the company right now? 95. It's at 95. 115 strike for September 19th, which is, right, 3 weeks away. So this person is thinking that the stock is going to rise from 95 to 115, or at least do a significant rise, so that the $1.90 that he paid for each of those calls increases nicely in share value. If we look on this, we see there are 3 trades with the same expiration, the same strike price, probably the same guy, loading up on this particular option. Now, if we click on this little thingy right there, this gives us some option and price data over time, over the last month or so, couple of months, on that, just that option, right? Just expiring the 19th of September at the 115 strike. We can see this line right here is the price of the stock itself, right? Ran up, what did we say, 45 points? Way up there. And then has since come way down. What did the option do during that time? What did this particular contract do during that time? Well, we can go back to, what is the date here? Right at the turn of the month in August. And the date of that option contract was right about $8, right? $8. The next day, $8.95, $11.75, $15.69, $26.20. Here's your highest price, coinciding with the highest price of the stock at 34. All right, went from $8 to $34 with the stock moving about 45 points. All right, so let's see, 8 minus 34 is 26. And so 26 points in the option contract versus $45, 45 handles in the stock. Okay, now the option is trading down here at $2 each. $2. So let's say the stock goes up $45. Well, 45 is a pretty big ask. Let's even take half of that. 22. Stock goes up $22 from here, from 96 to 116, 118, something like that. How much is the option going to be worth then? So if the stock goes up $22, option is going to go up. What was it? What's the other number? $45 for the stock, 26 for the option. If we cut that in half, that would be $13 for the option. So your $2 option is going to be worth about 15 bucks, right? If you buy 10 of those, that would be that would cost you $2,000, and then they're going to be worth $15,000 if the stock does just that. If the stock moves up half as much as it did back here. Now, I think that's what this guy is thinking, right? He's thinking that the implied volatility and the delta value of that particular option, this particular contract, is so leveraged that you're going to see a 4 or 5 bagger if the stock can make even half of the move that it made back then. So that's just one way of kind of analyzing. You take a look at the call flow, and you got to ask yourself, why is this guy buying that particular contract? It's kind of a strange strike. It's a strange expiration. But what he knew already was that contract has done really well when CoreWeave has a good run up higher. So that's why he was buying that one. Okay. And we're not going to do CoreWeave, so I'm going to take that one off the list. And we're not going to do Serve. I'll take that one off the list. So VST is one I like, but I'm already in the trade in the shares, so I'm going to take that off the list. And we've got Hood in the other room using shares, so we'll take that one off the list. All right, so now we're down to a handful of things here, and I need to do this quickly because I'm running out of time. In fact, if we run out of time, because I really need to leave just a little bit before 3. I've got about 7-8 minutes. Let me show you at least the first step of what I do when I'm making stock selection. Let's take GLXY as an example. Here I need to get another website up over here. You guys have seen this before. This is Tip Ranks, and I use several different tools, but this is one of the tools that I use to give me a kind of initial impression of whether there is good support for this guy moving higher. And I look at several things. So I'm looking at the overall analyst sentiment. If there are only 1 or 2 analysts, I'm not interested, but 11 analysts, yeah, I am. Strong buy, that's good. That's a thumbs up. $36 price target, average consensus, that's 45% above current price. Thumbs up. Let's scroll down and see if there are some good 5-star analysts in here that have good track records. What are they thinking? Well, there are, right? Here's a 5-star analyst. He has a 65% win rate. Every time he gives a buy, 65% of his buy ratings go higher. On average, over the next year, 47.5%. That's excellent. This guy is really, really good. All right. What does he think? It's a buy, 73% upside. 808 is when he gave this. So that was a couple of weeks ago. We can't assume that he hasn't changed his mind since then, but that's still very good. Look at these price targets. 73% upside, 61%, 36, 48, 40, 40, 60. Just crazy upside price targets on this stock. Okay, so we're definitely not going to take it off the list, but let's see how it compares to some others. Let's do coin. You know what? I'll just go right here. Coin. All right, now you can see right away that this is a different sort of support from analysts, right? There are a whole lot of analysts, but they're only at a moderate buy, and their upside price target is not near Galaxy, although it's pretty good. I mean, I have to say 18% is pretty good. So we scroll down. All right, this is good. All 5-star analysts are following the stock, and there are a couple of guys on here whose names I recognize, and that's always good, right? If you know that they're well known in the field as being a strong hedge fund manager or being a strong analyst. So these are guys, right? This guy, 65% win rate, only 14%, but maybe he's, covering stocks that aren't quite as volatile. This guy has a 66 and 40, and he's even better than the previous one. Where is he at? He's at a price of 510. He's on a buy, 64% upside price target. That's huge. And he did this just a few days ago, 10 days ago, 8 days ago. So that's actually a little bit more weighted than what we saw with Galaxy. But overall, I have to say that the bullishness on Galaxy is a little bit better than, because you do have a couple of holds in here, right? You've got a sell. Who the heck is, he's a 1-star analyst. He's on a sell rating. 42% of his ratings are bad. I mean, only 42% go higher, and 68%, 58% not so good. And his average return is a negative 2%. So yeah, we're not going to listen to him. All right, so what else is on the list? I'll just do a couple more of these. SNPX. This I know has very good fundamentals, but let's see what the analysts say. Okay, so they're on a strong buy. It's not a very volatile stock, so a 6% upside is not that great, but it's better than a poke in the eye with a sharp stick, right? Highest price target is 715. Let's see where the 5 stars are at. This guy's good, 66%. He's at a price target of 670, and he just recently raised his price target. What is the average consensus? 638, and he's up here at 670, which is a 12% upside. So that's not bad. Here's another 5-star, 61%, 18% win upside rate. And he's up at 625. That's not very much from here, but it is, yeah. Anyway, so SNPX probably wouldn't pass muster if we're looking for something a little more exciting. But if you're looking for a good, safe investment, I'm long shares and have been for a while. I think it's quite good. All right, let's do one more and see if we can't knock. It's either right now between Coin and Galaxy, and let's see if we can't knock that off with this one, which I don't know. Let's go to PRCH. And then we'll have to call it a day. All right, well, right away, even though this is the one with a really good chart, maybe the best chart of that group, it's only at a moderate buy. There are only 6 analysts following the company, so it's a little bit underserved. And the price target, even though it's a pretty good, moving stock, is only 7.5%. So none of that is a deal killer. None of that would, rule me out buying some shares of the stock, but there's not really anything in here except this one guy. Now, he's a 5-star analyst, but at a 46% win rate, that's not very convincing. An average return of only 16%, not very good. But he is at the highest, right, 35% upside. So maybe he sees something or knows something about the company that the rest of the analysts don't. These are analysts, by the way, that probably cover over 100 stocks, and they're not going to stay on top of every one. But when you start to see a trend among a dozen or so analysts, all moving in the same direction, all raising price targets, all really strong upside, all with recent iterations, and they've got strong track records, then that's worth paying attention to. All right, guys, so we've got our list whittled down. I'm going to continue to whittle down this list until we either get, either move on or we get a trade before the bell. Got about an hour of trading left. I'll produce this video, put a link in the room for those who weren't here and able to watch it. God bless everybody. Have a great rest of the afternoon, and I'll see you in the room in just a little bit. Bye for now.